financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to our very special episode of Follow the Money Radio. This episode number 422. Today, we're continuing in our 5 levels of financial freedom, and it's wonderful to have you here. Now, as you know, if you've listened to the last 3 episodes of Follow the Money Radio, you know that we've been covering the first 3 levels of the 5 levels of financial freedom. So just a real quick recap before we get into today's next level, which is level 4. You know, this is probably the most exciting for many people as we get into level 4 and level 5, because these are where you are actually beginning to invest. And investing is what many people want to do. They want to invest. They want to invest for the future. And that makes total sense. But the problem is that we've said over and over again, many times people will get ahead of themselves. They will put the cart before the horse, and they will begin to invest long before they have any kind of meaningful savings, before they have even thought about charitable giving, before they have even thought about protection and building the moat around the castle that they want to create. I mean, it's a classic example that many times people will begin to grow their assets, but then fail to create protection around those assets, and then something happens and they lose those assets because they weren't properly protected. So we teach kind of a line upon line, precept upon precept kind of approach here, where you are building out your moat, and then you build the castle, right? You don't build the castle before you build the moat. You build the moat, and then you build the castle so that the castle is protected. And the castle, what I mean by that, of course, is the number of assets that you're going to own over the course of your life, whether that be stocks or bonds or whether it be cryptocurrencies or real estate, whatever it is that you want to have in your asset mix. Well, you need to have some protection. And that's why we have laid out the 5 levels of financial freedom the way that we have, so that you do have some protection along the way. So back in level 1, you can go back 3 episodes ago now, and you can listen to level 1. That episode was number 419. And in that episode, we talked about level 1, creating a charitable giving plan, creating a go bag, creating 3 months of food and water supplies, and then beginning that systematic savings plan and building up 2 months of liquid savings. That is 2 months of your gross annual income, or gross monthly income, I should say. And then we moved on to level 2. That was in episode 420, where we talked about the importance of examining and improving your asset protection. Things like auto insurance, home insurance, and liability insurance, often called umbrella insurance. Well, an umbrella policy. Well, these are very, very important parts of your financial plan that many people, may just overlook. And so we spent some time drilling down on what you should be looking at when it comes to your auto insurance, your home insurance, that umbrella policy, how it can really come in handy for some people. We also talked about the importance of examining and improving your income protection. How do you do that? Well, disability insurance. Many times through work, you can pick up a policy through work. Healthcare insurance, of course, very, very important. And then long-term care insurance, right? So these are tough decisions that have to be made. Sometimes they're costly decisions, but these are decisions that you have to make. We also talked in level 2 about examining and improving your life protection. So we're talking about life insurance, wills, trusts. So if you're interested in the protection component of the 5 levels, then you'll want to go back and listen to episode 2 of this 5-part series, which was, again, episode number 420. Then on our last podcast episode 421, we delved into level 3. Which is all about building and diversifying financial reserves. So there you're building a total of 6 months food and water supply, 6 months gross income saved, and then diversifying that 6 month liquid savings. And we talked about what that looks like. So if you want more on that, more on that particular level, be sure to check out our last podcast episode. As I mentioned, 421 was the episode number. Now today, episode 422, we are diving into the topic of investing. So this is the exciting part, I think, for many people, as I've said. This is where we begin to build and diversify investments, right? So this is exciting. Remember, saving is not investing. Investing is not saving. They're two distinct activities in your financial life. And good savers make even better investors. Why is that? We've said it before. We'll say it again. The reason why good savers make better investors than the average bear is because they have money in the bank, right? So every time they invest, it is not trying to hit a home run, right? When you have no money in the bank and you go to invest, you will feel pressured many times to invest in that penny stock because it could go up and you need money, right? Or you could invest in some sort of risky venture because you need to hit a home run because you don't have any money. Right? Whereas the person who has some money in the bank, who has built up some liquid savings and has a cushion, doesn't have to run out and use his Visa every time he has a flat tire. When he goes to invest, he doesn't have to hit a home run with every single investment. He can invest in high quality assets with a patient, long-term outlook, right? Now, obviously, when it comes to investing, we also want to say that it's not the same as saving and it's not the same as trading. Right. So trading is another tactic we teach here at Follow the Money. I've been a trader for a very long time and an investor, but they're not the same thing. So I'm a saver, I'm an investor, and I'm a trader. Right. But they're all three very different activities. And understanding how different they are and what their purpose is so vital, I believe, to your financial life. Many times trading and investing get mixed up. Just like saving and investing get mixed up. People, they just kind of conflate them. Well, certainly trading is not investing, right? And we're going to talk more about trading in level 5. So today in level 4 is where we begin to invest. And before you ever trade, I believe you should understand investing, right? So that's why we put level 4 before level 5. That's why we put investing before trading, which comes as a more speculative strategy that we'll talk about in level 5 in our next episode and the final episode of this series. So with that said, let's move into level 4 now. So if you're here in level 4, and obviously if you've been listening to this podcast series, I don't expect you to already be in level 4, right? Some of you are already there because you've been at it for a long time, or you've been building assets and you've been saving and you've got protection and all of this. You've got it all figured out. Well, that's great. Some of you are already in level 4. Some of you may be already in level 5. Others of you may just be getting started, and that's totally fine because these podcast episodes are really going to serve as a reference point for you. Go back and listen to them as you need. Now, so as we move into level 4, we are assuming now, in this case, that you have completed all of the steps of level 3, right? All the steps of level 2, all the steps of level 1. And remember, when we say completing those steps, we don't mean that you've done every single one of them. It's that you've made a decision about every one of them. So back, say, in level 2, when we're talking about, disability insurance, and you look at that and say, well, I don't want disability insurance. Well, fine. You don't have to buy disability insurance as long as you know that you made that decision, right? The worst thing that I saw as a financial advisor many years ago when I was advising clients was when they would come in and they would be a new client and they would say, I had this issue and now I wish I could do it differently, right? Well, there's no do-overs when it comes to things like that. So if you can ever imagine needing disability insurance, well, you have to ask yourself, do I want to no longer have access to it? Do I want to write it off and say, no, I don't want it? Well, you've got to make that decision. The worst thing that can happen is that you didn't know that the decision was yours to make, and then something happens. Well, that's really bad, right? It's better for you to look at the situation and make the decision. That way you own the decision. If something happens, you own it, right? So you don't want disability insurance? Fine. Don't buy disability insurance, but be prepared to foot the bill if you get disabled, right? That's how it works. You may say, I don't really want a will. I don't want to make a will. I don't want to go, it's going to cost me $100 or $300 or whatever it is. I don't want to meet with the attorney. Fine. But realize that the state already has a will for you if you don't have one, right? You've got to realize that to every decision you make, even if it's a decision to say no, there's something on the other side of that decision. So you may not want to have a will, that's fine, but the state has one for you, and you'll find out. You may not want to have guardianship for your children because it's taking too long to get that form filled out, and you don't know who to pick. Don't worry, the state will choose for you if you don't choose, right? And you may not want the state to make that choice for you for guardianship for your children or where your assets go. You may not want all of your assets hung up in probate. So in that case, you would do a will. You would create a will, right? Or maybe you want to be able to pull strings from the grave, so to speak, with some of the assets you have now for your children. You can use a trust to do that, right? You don't have to do these things, but in my opinion, you have to decide that you don't want them, right? It's tragic when somebody dies prematurely and they didn't have life insurance to cover their family, maybe their wife, their spouse, their children. Well, they made a decision. They said, well, if I could go back, I would buy life insurance. Well, that's why you need to do it now, right? You have to decide now. That's what the 5 levels is all about. Going through and checking through the boxes, right? And saying, this is what I'm going to do. And if you can't, get to that disability insurance, or if you can't get to that will, or if you can't get to that food and water storage, or whatever it is in there, well, it may take you some time. But you have to be the decider, right? This is what's so important. You have to own your decisions. And that's what the 5 levels of financial freedom really does. That's the magic, I think, of it, is that it forces you to make the decisions that you need to make on things that you may not have thought about, right? So very, very important. So now in level 3, we have that solid reserve of liquid savings now built up, 6 months of liquid savings. That's very powerful for your financial plan. I mean, it puts you in a very good situation. You have that store of food and water so that you can use to feed your family and help others in time of need. We've gotten emails and even some tweets from some of our folks here at Follow the Money, some of our members who were down in Florida during Hurricane Ian, once again testifying to the power of having that food and water supply, able to help other people, right? Having that go bag. This is a real thing, These kinds of actions that you can take have real meaningful power whenever you need them. And so just once again, just the testimonies we've heard from people who were like, I am so glad that I made a decision to do this or that because, right, something happened. You make the decision. That's what this is all about. And of course, you do want to make that decision, obviously, in the presence of good counsel, right? It's even better to have, there's wisdom in the multitude of counselors and safety in the multitude of counselors. And so having an attorney who drafts the will instead of you writing it by hand at home, you having a financial advisor who helps you, make those decisions that you need to make. But you're ultimately the one you're the quarterback. You're the one who has to decide, what's going to happen. Or the coach, maybe we would say. Okay, so now that we have level 3, we're moving into level 4. And level 4, as I mentioned, is all about building and diversifying investments, right? So we're gonna begin by investing broadly across various asset classes. Now, I want to explain what I mean by that. But first, let's just talk about level 4 for a minute. Level 4 is all about building and diversifying your investments. You may recall from level 1 that you began a systematic savings plan, ideally saving at least 15% of your gross income, right? Not everybody can start there, but you can get there. That's the goal. Now, by now, in level 4, you have 6 months of your monthly income saved. You've diversified in liquid assets so that you have the ability to protect your savings from inflation, which we talked about in level 3. And now that you have your savings reserve, you are not going to stop saving 15% of your income. So as soon as you have that 6 months of liquidity saved up, you're never going to stop saving. That you're going to keep saving that 15% of your income. But rather than putting it into your 6 months bucket, which you've already got saved, you're now going to divert that 15% into investments. Okay? Now, if you ever drop below your 6 month of liquid savings, you're going to immediately stop adding new money to your investments and replenish the 6 months of savings, and then resume adding to your investment pool. So as we look at level 4, the very first step in level 4 is to invest broadly across various asset classes. So let's talk about what that means. Although you may have a diversified portfolio of stocks as you're listening to me today, that's just the first step, of diversification. What we advocate here at Follow the Money, and we've been teaching now for many, many years, is the fact that it's the best thing that you can do when it comes to investing is to diversify across many different asset classes, not simply stocks, right? So if you own an energy stock, a tech stock, and a consumer discretionary stock, for example, that may sound like you're diversified, but that doesn't make you diversified across various asset classes. It makes you perhaps diversified, not even really diversified, but let's just use that word, in the stock space, right? So let's define what an asset class is. An asset class, and there's varying definitions in the investment world, but we define an asset class as a group of investments that have similar characteristics and behave similarly in the marketplace. So some of the most common asset classes include real estate, stocks, bonds, commodities, cryptocurrencies, business interests, right? And we could go on and on and on. There's many different kinds of assets. So you could own a business, you could own a cryptocurrency, a commodity, a bond, a stock, real estate. The point is, the goal of level 4 here is that as we begin to invest, we're not going all in into stocks or all in into commodities or all in into cryptocurrencies or all in into our business, which is actually a mistake that many business owners make. Many business owners actually put lots of money into their business, and it makes sense because it's one of the best returns they can get. But the problem is that they're not diversified. And so many business owners, need to have other asset classes going on because they become overly dependent upon their business. And if something happens to the business, then all their assets are in the business. Well, that can become problematic. So having a diversified investment strategy across various asset classes, that's what we teach here. So, as I've said for a long time, you may own a portfolio of excellent stocks for the long term, and that's great. But you would certainly not be diversified across asset classes just by having that portfolio of stocks. Right? Stocks are paper assets. You want to have some hard assets. You want to have things like real estate, things you can touch, right? Precious metals, gold and silver, things that you can hold. How about some digital assets, like Bitcoin? How about other assets like a business, right? So that's a great way to get diversified. And so after you've saved up your 6 months of liquidity, now you're taking that savings every month from your paycheck, that 15% ideally of what you're saving, and you're pouring that instead of into your savings reserve into your investment. So you're keeping that powerful habit of, taking 15% of your paycheck and moving it away and putting it away for your future self. But you're no longer putting it into that savings pool because you've already filled it up. You filled up that bucket. And like we said, you'll come back and fill it up if you need to, if you have to use it for some reason. But in the meantime, you're not going to put any more money in there. Now you're putting it into investments. Powerful habit that you have here that you don't want to stop. That's going to empower your future self with your current paycheck, right? So now we're going to be putting money into investments. Now, one of the most common investments that people will begin with, especially if they work for an employer, if they're not self-employed, is a 401k plan or a 403b plan if you're a teacher or you work in the nonprofit space. And the 401k plan is a fine place to begin saving or saving for retirement, investing for retirement. And remember, a 401k is not itself an investment. It's essentially just an account that's regulated by the 401k section of the IRS tax code. And you can put money into your 401k each and every month, and oftentimes your company will match your contributions, sometimes dollar for dollar. And if that's the case, then we suggest contributing enough to get the full employer match. But seriously consider other financial products for the rest of your retirement savings. And we really believe that. And the problem is that when you contribute to a 401k, you don't have to pay income taxes on your contributions. And that's really good. So people like to put money into a traditional 401k, and it lowers their overall income level at the end of the year. So they end up paying, less taxes. And the taxes that are deferred there until you reach retirement, and then you begin taking distributions from the 401k, and then the taxes come on the distributions. We really prefer a Roth option. So if you are anywhere like 15 years plus from retirement, it's my opinion. Now, this is my opinion. This is what I prefer. I prefer a Roth over a regular traditional 401k or a Roth IRA as opposed to a traditional IRA. And the reason is that you pay the taxes now, and whenever you take money out at retirement, there's no taxes, right? That's the way the Roth is set up. So you pay the tax beast now, and then later you get the money tax-free, and it grows tax-deferred. Now, you got to meet a certain few requirements, but as long as you meet all those requirements, and most people do, then you're going to be able to receive that money tax-free in retirement. And since the United States federal government, by the way, is on a collision course with bankruptcy in our country, it may be wise to think twice about placing most or all of your retirement savings into a government-controlled asset like the 401k. If you put your money into a 401k, it's like a black box, and the government has the key. You don't hold the key. So they can decide how much they're going to tax you when you reach retirement. You have no control over it. This is why the Roth gives you control back over the tax rate that you're going to be charged. You don't know what the tax rate's going to be whenever you retire. So it's like a big unknown. And it's a little scary to put money into that black box and give the government the key and say, okay, well, in 25 years when I retire, just give me back whatever you think is right. I mean, that's literally what the traditional 401k is. You don't know what the tax rate's going to be. They could slap a big distribution tax on 401ks if they want to, right? What are you going to do about it? Nothing. You can't do anything about it. So the only thing you can do is say, well, I want to be taxed now at a known rate as opposed to a future rate, which I don't know. And based upon the $31 trillion national debt we have in this country and the fact that we're spending trillions and trillions every single year, the government's going to want more tax money, right? And that big pot of money sitting in 401ks, they have to be licking their chops looking at it, huh? So you got to be thinking to yourself, do I want to pay the tax beast now, or do I want to pay him 30 years from now when I retire and he's extra hungry, right? So we really like the Roth option. It allows you to pay those taxes now. You don't get the tax deduction for contributing to the Roth IRA or the 401k, but in the end, you also don't have to pay taxes on the distributions, which is really powerful, really, really powerful. So remember, what we're doing here is we're continuing our systematic savings plan, ideally saving at least 15% per month. We're diversifying our investment dollars across various asset classes, not just stocks, not just real estate, not just commodities, not just cryptos, not just your own business, right? We want to think twice about contributing in excess of the employer match to our 401k. We can always find other places to put it. And again, that 401k, anything above the match is, unless it's a Roth, again, there's other places that you can find to put money. And so we would only contribute up to the employer match with a 401k. We also want to consider all available retirement saving options before simply maxing out the 401k, as many people tell us to do. And ask your employer, you got to talk to your HR department, but find out if it offers a Roth version of the 401k if you prefer that tax-free income in retirement. All right. So we're talking about investing broadly across various asset classes, not just one. The other thing we talk about at level 4 is the importance of remembering P.A.C.E for inflation protection, right? P.A.C.E is a simple acronym that I've taught for many, many years. Talked about it in our book, Bankruptcy of Our Nation. P stands for precious metals. A stands for agriculture, C stands for commodities, E stands for energy. Okay, so if you've been paying attention to the raging inflation here in the United States and many other countries, agriculture, commodities, and energy prices went haywire, right? Precious metals also a little bit, but not as much as what we saw in some things. Like some commodities were outrageous, going way high. Energy especially, West Texas Intermediate crude recently hit like $130 a barrel earlier this year. So we haven't seen that in a long time, right? So these 4 types of assets, precious metals, agriculture, commodities, energy, these are known as hard assets. And they have performed well during times of inflation, historically speaking. And these hard assets are tangible investments often that you can physically touch and handle. And we think that, having some exposure to that, again, not all in precious metals, not all in agriculture, commodities, or energy, but having some exposure to these areas in your financial plan, in your investments, we believe is a smart idea. So it's not just, again, one asset class. We want to stress this over and over and over and over again. You want to have various assets in your investment portfolio. You also want to avoid overweighting in any one area. Many times when we have a new member here at Follow the Money, they will come in and one of the first things they'll notice is like, wow, I am way over leveraged in cryptocurrencies, or, in this particular commodity, or I am way over leveraged in stocks, or I'm all in on real estate. I've got to kind of diversify a little, right? And we really teach people to avoid overweighting in any one area because of one simple reason. And because some people say, well, diversification is dumb if you know what you're doing. It's not true. It's not true. I know it sounds good, but it's not true. And the reason is because diversification is not dumb, because the rules of the game can change, right? So the IRS code is where you find the rules of the game, And who sets the IRS rules? Well, of course, it's the Congress. They can choose to change those rules at any time, right? So if you're all in on one asset class, and then the Congress decides to make a new rule about that asset class, what are you going to do? Huh? So being over leveraged in one area can be dangerous. You have to be nimble in this kind of environment. If you haven't noticed, we live in a very dangerous economic time, right? Where the policymakers are doing crazy things. And so you've got to respond to that by being nimble. And as you grow your assets, keeping them spread out so that no one single act by Congress can really do you in, right? It can happen. It's happened many times. So you have to be aware. We also teach a couple more things here about level 4 before we bring this to a close. We teach the concept of trading cash for cash flow when possible. This is a really powerful principle, and I could spend the whole podcast just talking about this particular topic, but this particular concept. But trading cash for cash flow is a very powerful way to think. If someone were to offer me, $100,000 up front, just like I'm going to give you $100,000, or they said I'm going to give you $1,000 a month, right, for as long as you live, many people would only hear the two different amounts. They would hear the 100,000 and they would hear the 1,000, right? Now, to me, I realize that if I get that $100,000, what am I going to do with it? Right? What am I going to do? I'm going to have to go put it somewhere, right? And I'm going to have to go put it in, and I'm going to have to manage it. I'm going to have to try to make sure that I don't lose it. And I'm going to have to try to, but if I could just get $1,000 a month, well, that kind of solves the problem, right? Because that's really what I wanted to do from the 100,000. I wanted to take the $100,000 and try to draw some sort of income off of it or make it produce. But if I can have $1,000 a month coming in for a long time, well, I'd much rather have the cash flow. Do you understand? Because all I'm going to do with the pile of cash is try to create cash flow. So if I can have the cash flow instead of the cash, I'll take the cash flow. Okay. All things being equal on balance, assuming that there's not some sort of crazy strings attached. I'm just talking about, all things being equal, I would rather have the cash flow than the cash, because oftentimes when you do get cash, you're just simply trading it for cash flow if you're smart. And so the point is that I don't want a big pile of cash just sitting around. I would much rather have cash flow coming in. And that's what you do with a pile of cash. You have to go find a way to create and generate cash flow. So my point is that when it makes sense, trading cash for cash flow really makes a lot of sense. It really makes a lot of sense. There may be some situations where it doesn't. I'm not saying that it's a general rule that should always be applied, but I think it's a concept that we should keep in our minds, realizing that cash flow really is king over cash. Cash flow is really what we're after, right? So if I can take a pile of cash and trade it for, take a small pile of cash, say like a down payment for a rental house, and I can trade that for the house, then I'm trading it for cash flow, right? If I can take cash, a pile of cash, and I can put it into, say, some sort of fixed annuity that is going to pay me a guaranteed amount, every single month. Well, if it makes sense, then I may want to do that, right? You got to just look and see. It's not always right for everybody, but there are ways to take cash and turn it into cash flow. And oftentimes that's really what you were wanting after all, right? And keeping the cash, the pile of cash, may be detrimental. You may put it in something wrong that goes south. And so the cash flow is really what we're after. Okay, like I said, I could go on and on about cash flow for quite a long time, especially when it comes to trading cash for cash flow. Now, the fifth and final step of level 4, and by the way, you can go on our website and drill down much deeper into all these topics at followthemoney.com/5 levels. But we're talking about level 4 today. We're going through the 5 points of level 4. We talked about invest broadly across various asset classes, step 1. Step 2, remember P.A.C.E for inflation protection. Number 3, avoid overweighting in any one area. Then step 4, trade cash for cash flow when possible, which we just talked about. And then the 5th step of level 4, and that is to begin creating multiple streams of income. So multiple streams of income is another topic we've talked about for many years. In our book, Bankruptcy of Our Nation, we actually list many different income streams that you can create both now and in retirement, more than 20. And in fact, on our website at followthemoney.com, for our gold and platinum members, we actually have created something called the Income University, also known as the Multiple Streams Academy. And what we do here is we teach you how to earn from different income sources. You may not know that the average American family today just has 3 income sources. And then even more shocking, the average American retiree relies upon just 2 income sources on average. But there are more than 20 income streams that anyone can create, both now and in retirement. And in these challenging and perilous economic times, it's important, in fact, more important than ever, to diversify not just your savings, not just your investments, but your income. You can diversify your income. How? Through the creation of multiple streams of income. And in our online income university for our gold and platinum members here at followthemoney.com, we teach all 22 income streams through a unique online series of courses. So we talk about in course 1, how to maximize your Social Security check. Course 2, how to maximize your pension income. Course 3, how to maximize your 401k or 403b plan. Course 4, how to maximize your IRA for retirement income. Course 5, how to create dependable income from interest. Course 6, how to create a passive monthly income from the stock market, right? Course 7, an introduction to creating rental real estate income. Okay, on and on and on. All 22. We talk about how to create monthly income from real estate without being a landlord, right? Would you like to know how to do that? It's right there in our course. How to create a lifetime income with trusts. People don't know about this. The course number 10, the basics of creating a lifetime income with an annuity or with life insurance, consistent income from life insurance. Many people don't know about how to do that. How to create a tax-free lifetime income with a reverse mortgage. You can rent out your stock portfolio. You can earn income as a property tax investor, tax liens. You can create an immediate income by leveraging other people's labor or with affiliate marketing or with direct marketing or through stock trading or through investing in small local companies or creating an income with royalties and patents. You can sell information. You can stake cryptocurrencies. There are so many ways that you can earn an income, right? And if we can get multiple streams of income going on in our financial plan, then we are going to be very well positioned going forward. We want to think in terms of a diversification. Remember, not just savings diversification, not just investment diversification, but also income diversification. All right. So there you have it. The level 4, all about investing, right? Investing broadly across various asset classes, remembering P.A.C.E for that inflation protection. Don't overweight in any one area. Try to stay nimble. Trade cash for cash flow when possible. And really focus upon building multiple streams of income. This is a really powerful level 4. And if you begin to work in this area and think about it and kind of commit yourself to spending time in this area, you can really begin to build a nice diversified investment strategy. Hey friends, Jerry Robinson here from Follow the Money Radio. 2022 sure has been flying by quickly. We're already halfway through the year. Summer is here, and we are running a very big summer sale here at followthemoney.com with inflation raging the way that it is, and many people are looking for ways to earn more income through multiple streams of income. Maybe they're learning to learn a new skill like investing or trading. These are the things that we can help with here at Follow the Money. We've been helping people all over the country and the world for over a decade, learning how to break free financially. We have many, many courses for our members, lots of ongoing services. And right now is probably the very best time to become a member. We have a deep discounted sale right now going on. Simply go to followthemoney.com/join and find out the details. No coupon code is required right now to have access to this great sale. Lock in cheap prices for right now with a followthemoney.com membership. We have a silver, gold, and platinum plan. Go choose which one is right for you and become part of our global investing and trading community. Come invest in your financial education at followthemoney.com in 2022. That's followthemoney.com/join. Get all the details there, and I sure hope to see you on the other side.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the program. Great to have you here. You can find us online, followthemoney.com. We've been serving members all around the world since 2010, delivering investment ideas, trading ideas every single day. In fact, I put out a daily email it's basically a daily newsletter that I put out, something that I've written along with a new swing trading idea for those of you who are swing traders. But on our website, we have much more than just trading ideas. We have daily trading ideas, whether you're a position trader, a swing trader. We have long-term investment ideas. We have all kinds of stuff. We have a crypto portfolio, a crypto leaderboard, an ETF leaderboard if you choose to invest in ETFs, looking for those that are leading. And then, of course, our income university I was talking about earlier, plus so much more. It's incredible. We do a Tuesday call live every single Tuesday where we provide new ideas, updates, education. So we just talked about dividend aristocrats on our last Tuesday call, all about dividend stocks, dividend paying stocks, and why they work for people and how to make them work for you. So, no matter what you're trying to learn, trading, investing, or saving or earning, we've got it. It's followthemoney.com. Just become a member here. Go to our website and check out which plan's right for you. And right now we have a really great deal where you can get one of these memberships very, very discounted price. So be sure to check it out. followthemoney.com/join to see our plans and pricing. All right, so on our next episode, as we had mentioned, we're going to be tackling the fifth and final level of the 5 levels of financial freedom. That's going to be focused upon advanced investing and speculative investing, sometimes referred to as trading. So we're going to talk about opening or expanding your own business. We're going to talk about stock and option trading, internet affiliate marketing, venture capital, real estate strategy. So it's going to be a really fun episode. We're going to go through it very quickly, but we, of course, have tons of resources on our website regarding all of these topics. So all of that next time we do our podcast, be looking for that. And as always, I'd like to leave you with a final word, this time spoken by the great theologian and founder of Methodism, John Wesley, when he said, "Earn as much as you can, save as much as you can, invest as much as you can, give as much as you can." Words of wisdom and just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.